Well, good afternoon. I was going to do this video earlier, but I got really kind of hypnotized by this freak show of a market. I mean, in the last half hour, it was swinging between 500 and 800 points down. It didn't sell that much. It didn't end on the low, but very close to it. What's frightening is the Fed cut. I mean, a 0.5 or 50 basis points is a big cut, and it didn't. Nobody seemed to care. So that's pretty much all they can do. I mean, they've shot their wad. That's it. So whatever's going to happen is going to happen from now on, unless they come up with a vaccination or some way to fight this coronavirus. But I'm kind of concerned that this is going to be, we're going to go into either a recession or a bear market or both. So I'm concerned for retirees. Gosh, I retired in January. I'm sure glad I did, because I would be really, my hair would be falling out on this, after this month. But, okay, now that being said, what do you do? Now, back when I was with Maryland, 207, 209, and we had these live screens, and there was volatility very similar to this. I would watching it because I wanted to learn something. I wanted to see. I thought that it would be like a lifetime event. It wouldn't happen again, but it looks like it's happening again. So I'm going to do what I did then, and it was successful then, and hopefully it'll be successful now. So the question is, what did I do? I mean, you need a return, or you would like a return, and you don't necessarily need the market drama or the volatility. So this is what I have done. Now, yesterday I bought NGL, USAC, and CPLP. Now, they were beaten down. They had an 18% yield. Now today, because the market going down, and these seem to be a target for when the market goes down. Even though they've got a 0.51 beta, it was down 4.91% compared to a 3% for the S&P. So the other ones were pretty much in line, but the outlier was NGL. And what I plan to do with this one, now that their dividend is like 20%, is pretty much what I did back then. You'll have these stocks, NGL just reported, and they have really good cash flow, and they have a really good coverage of their yield, and they said they don't plan on going to a C Corp, which would affect their yield. Their insiders have been buying this thing hand over fist, and now it's at a 20% yield, which means in 5 years it pays itself off. So if this market keeps getting crazy and the hedge keeps working, I would probably get rid of one of my 11 percenters, like this GLQ, which has a higher beta, but it's only got an 11.2% yield. So the more as this market progresses, and if it is a bear market, you're not going to, 2020 is probably pretty much done as far as earnings and things like that. So that would probably boost my yield to maybe closer to 15. The hedge, I had a hedge as of Monday. I had stops on the hedges. I stopped out, but I bought back in today. It's the VXX, and it works well in times like this. Like today, the market was down 2.82%. This was up 11.85%. It basically carried the portfolio. And that's all I care. I don't care what the rest of it does. If NGL goes down another 50 points, yay, I'm going to buy it because I can hedge it and I would just get a higher yield. And this is what you do is as this bear market and or recession continues. So as it is now, if nothing happens, I mean, and I can hedge it out and I don't make any money on the, return side, I'm still going to make 14.3% this year, which is fine with me. And that's pretty much how you do this. It worked well in 2007, 8, and 9. I had several retirees, and I really didn't know what to do because, these people still needed a check every month. They still needed income, but if their assets got cut in half, they were essentially doomed. So I came up with this out of sheer terror, and it worked. So I've always kind of kept this in my hip pocket for times like this, and hopefully it works again. There's another possibility for if you want to go with larger portfolios, like if you have a couple of 100,000 or bigger than that. I combined two, the monthly pays and this, and it's 0.46. This wasn't hedged today, and it was only down 0.4. Let's see what happens if we put a hedge in. Let's put a VIX hedge in. It would have been up 0.5. See, that's the beauty of this style of investing. When the market gets hairy, you buy one position, VXX, and you're done. And then when the market starts to recover, you're out. And then all of a sudden you let the good times roll and things go up. So it's a simple process, but it's very effective, and it works well in train wrecks like we got going now. So I just thought I'd share this. And let's see, 10, 30, this actually, now the numbers are still coming in. So this was flat today. So that's still okay with me. This is 15 minutes behind, and the markets are so volatile, it can kind of change a lot quickly. So I'm good with flat in a market that's down like it is today. And I don't know what's going to happen tomorrow, but it really doesn't make any difference, because theoretically, and in this market, everything I refer to is theoretically. If the market turns and goes up, these will all go up, and we'll see what happens. But that's about it. I wish I had better news. I have no idea what this market's going to do. All I know is everybody keeps talking about the coronavirus, and they're not going to have this meeting, they're not going to have that meeting. It's getting worse overseas. And, they said they're going to have all the governments come in and cut rates altogether. They can't do that, because if they cut rates, they're already negative. So there's not a whole lot the federal banks, or the banks, sovereign banks, can do in this situation. So we are kind of at the mercy of whatever the market's going to do, and whatever the news is, and whatever what happens with this virus, which I don't know that it's ever going to get. It's going to get better soon. So I am just planning for the worst and hoping for the best, and that would be a portfolio like this. And that's exactly what I did today, and hopefully it gets better. So it hasn't changed that much. So there you have it. So I wish I had better news. I don't. I hope it's better tomorrow. But at this point now, I don't really care, because I'm buttoned up, and I'm ready for whatever happens. So I hope this helps. Everybody out there that sees this, you should be going defensive. If you're not already defensive, you should either raise cash. You should get out of the S&P 500, because that has been way overpriced. But the problem is, even with the S&P 500, let's see what the rest of them have done. This is IXUS. That's all the companies outside the U.S. Not so good. Bonds are good. VTI down. IJR, that is small caps, down. Not as bad as the S&P. RSP, which is the S&P equal weight, it was down, just about the same. Mid caps, wow, they're down. IWM, which is Russell 2000, down. So there's really not a lot of places to hide. It's a general sell-off. So increase if you don't have availability of hedging. And these are some of the hedges I look at. And you can use these when the market gets crazy. Let's see, where are they? I keep a list, and I like the inverse funds. Okay, let's see what happened today with the inverse. SQQQ, that's a short QQQ. It was up $1.92 or 9.57. SH, which is inverse S&P 500, it was up 2.91. Hibbs, I'm not crazy about this one, but this is a 3 times. It was down. See that? Now that's kind of interesting. I don't know how that could happen if it's a true inverse. And then there's UBXY, which is a multiple of the VIX. It's like a double or something. So these are what you use. You buy you buy some of this, and you hedge out the market risk. And it's about the only way other than bonds to lower your beta. And see, these things all have negative beta, so if you add that into a portfolio, it brings your beta down, your risk and things like that. So see, the bonds have a negative bond, AGG has a negative, and so does BND. And they were up today 0.6 and 0.61. So that would be a suggestion, but I think other than that, I really don't know what else you can do. And there comes a time where you just don't want to take any more losses. So there's, in a market like this, you can go to cash, go to bonds, or hedge, and those are your choices. So I wish I had better news. Let's see if there any other. Okay, shares dive, everybody, okay, whatever. So that's about it. I will, if there's any new things happening, I'll let you know.